Hi, and welcome to www.collegeplanningexperts.com. Today I'm going to reveal to you the top 3 insider strategies available to reduce your out-of-pocket costs for college. Having talked to 1,100 families, countless admissions directors, and financial aid offices, our office has put together what we believe are the top 3 insider strategies that most families have never even heard of that will save you thousands of dollars right now for college. Before I get into these strategies, let me give you a little background information on how the higher education system works. The federal government will calculate the cost for college by using the equation cost of attendance, or the cost for the college, minus your expected family contribution, or how much you're expected to pay, will equal your need. So with that being said, let's get into these strategies. The first one is you need to completely shelter your home equity from the financial aid system. The way the financial aid system will calculate your EFC is they'll ask you for your personal net worth on the financial aid forms. But here's the thing. You do not have to include your home equity on the financial aid form. But they're not going to ask you for your home equity. They're going to ask you for your personal net worth. So make sure that you exclude your home equity from the definition of personal net worth on the federal financial aid forms. Now for the private schools, they're going to ask you what the home equity is, but here's an insider tip. You can use what's called the Federal Housing Index Multiplier to get your home assessed based on the national average to take into account the inflationary pressures of Los Angeles real estate. Now this is going to be key because, for example, if your home equity is $500,000, 10 cents on the dollar for your EFC means you have a $50,000 expected family contribution based on your home equity alone. If you were to use the Federal Housing Index Multiplier, that would bring your home equity down to, let's say, $200,000. That will bring your EFC from $50,000 a year to $20,000 a year, which will save you $30,000 a year in financial aid. So make sure you exclude your home equity from the federal financial aid forms, and for the private schools to use the Federal Housing Index Multiplier. Alright, strategy number 2 is make sure you don't save money under the students' names. Now a lot of financial planners will tell you to use 529s and UTMA and other student savings accounts. Many of you may already have them. But having studied the Higher Education Act, our office knows something extremely important. Assets under the student's name are assessed 50 cents on the dollar, while assets under the parent's name are assessed 10 cents on the dollar. So for example, if you have $50,000 in a 529, that means your EFC is going to be $25,000 a year. If you were to take that asset and put it under the parent's name, now you have $50,000 under the parent's name, which is only $5,000 expected family contribution. You just went from a $25,000 to a $5,000 expected family contribution by using that one strategy alone. So make sure that any assets that you have for college are under the parent's name, not the student's name. And then the last strategy is if you own rental real estate, you want to make sure you get that shelter, because if you have, for example, 1, 2, 3, or even more rental properties, and you have 50, 100, 5, $1 million of home equity, you're not going to qualify for financial aid unless you use the following strategy. Take your rental property, open up an LLC or a limited liability corporation, and put the rental property under that business asset. Because on the financial aid forms, according to the Higher Education Act, as long as you have less than 100 employees employed within a business, the business net worth is equal to 0. That's right. That means all your rental property equity under an LLC is now 0. And that will save you tens, if not $20,000 in financial aid per year. So there you have it. Shelter your home equity, use the Federal Housing Index Multiplier, don't save money under the student's name, and open up an LLC for rental properties. So there you have it. So here's what I've decided to do. After talking to 1,100 families And this information is actually a segment from a workshop that I put together exclusively for families by invitation only. After having heard all the questions that families have about how the financial aid system works, I put together an A through Z system on how to find the right college, maximizes the chance of getting in, reduce your out-of-pocket costs for college, and then fund for it correctly. This is a system that I charge my clients between $5,000 to $10,000 a year just to get access to. And I'm making this entire system available to you for free. So simply give me your name and your email address after this video, and I'll send you the system for free and give you information on how you could potentially attend one of my exclusive 90-minute workshops on how to pay for college regardless of your income or assets or your students' grades. So again, give me your name and email, and I'll see you on the other side.